In a growing number of places, you can no longer buy insurance for your home at any price. Not because of anything you did, not crime, not neglect, simply because of the climate. And that quiet collapse, happening one canceled policy at a time, could turn out to be the first crack in the next great financial crisis. Today, we follow the money to see how a changing climate is arriving, not as a distant environmental story, but as a threat to the entire financial system and to your wallet. Let's start with what's already happening. Across parts of the United States and the world, homeowners are opening letters telling them their insurance simply won't be renewed. Major insurers have pulled out of entire states like California and Florida. In Florida alone, 9 insurance companies failed in just 3 years. And today, roughly 1 in every 13 American homeowners has no insurance at all, leaving more than $1.5 trillion of property completely unprotected. Now, it's tempting to think that's just a few risky homes near the coast, but this is the leading edge of something enormous. And to understand why, you have to understand a quiet truth. Insurance is the invisible backbone that holds the entire modern economy together. Here's how it works. Insurance is a simple, elegant deal. Everyone pays a little so that the unlucky few who suffer a disaster can be made whole. It works because disasters are supposed to be rare and scattered. The many safely cover the few. But that entire model rests on one crucial assumption, that the past is a reliable guide to the future. Insurers set your premium by looking at history, how often floods, fires, and storms have struck before. And that is exactly the assumption that climate change shatters, because disasters that used to be rare are becoming common. So-called 100-year floods now arrive every few years. Wildfires burn hotter and wider. Storms grow more intense. Suddenly, the past is no longer a reliable guide to the future at all. In 2024, insured losses from disasters hit a record of around $113 billion, spread across 27 separate billion-dollar disasters in a single year. And when insurers keep paying out far more than they ever planned for, they have only 2 options: charge a lot more or leave. So both are happening at once. Premiums are exploding, up by roughly a third in just a few years across the country, and far faster in high-risk areas. Even the insurance that insurers themselves buy to protect against catastrophes jumped by as much as 45 to 100% in a single year. And where the risk becomes too high to price at all, companies simply walk away, refusing to renew policies and abandoning whole regions. Here is the crucial link most people miss. A home you cannot insure is, almost always, a home you cannot get a mortgage on. And that is where a personal misfortune becomes a systemic threat. Follow the dominoes. No insurance means no mortgage. No mortgage means far fewer people can afford to buy that house. Fewer buyers means its value falls, sometimes sharply. Now multiply that across entire neighborhoods and then entire regions. The chair of the Federal Reserve himself warned that some areas of the country could become effectively unmortgageable within 10 to 15 years. And when property values start falling across whole regions, it is no longer just a homeowner's problem. It slams into the banks that hold all those mortgages. It guts the local governments funded by property taxes. And it cracks one of the deepest assumptions in all of finance, that real estate is safe, stable, reliable collateral. One major analysis projects nearly $1.5 trillion in property value could be wiped out over the coming decades from this alone. This is what makes it a slow-motion financial crisis, rather than just a weather story. Think back to 2008. That crash came from a single bad assumption baked deep into the housing market. The belief that home prices could only go up. Climate risk is now quietly baking a new bad assumption into that very same market. The belief that homes will always be insurable and will always hold their value. As that assumption cracks, the losses don't stay with homeowners. They ripple outward into insurers, banks, pension funds, and governments. It won't be one dramatic, single crash. It will be 1,000 quiet cancellations, slowly adding up. And then there's the question of who actually pays for all this. As private insurers flee, governments are stepping in as the insurer of last resort, which quietly puts taxpayers on the hook for the losses. Rising premiums become a kind of hidden climate tax that everyone ends up sharing. even people far from any coast. And it splits the world in two. The wealthy can afford to adapt, to rebuild, or to absorb the cost. Poorer families and regions get stranded, left holding a home that is their single biggest asset, and that has suddenly become unsellable and uninsurable. The same brutal logic is spreading beyond houses too, to farms, to businesses, and even to entire countries. So why does this matter to you, even if your own home feels perfectly safe today? Because it reaches your wallet through more doors than you'd think, through rising premiums as insurers spread their growing losses across all their customers, through the value of your own property and the mortgage attached to it, through your taxes as governments bail out collapsing insurance markets, and through your investments if all of this begins to destabilize the banks and property markets your savings depend on. For years, climate change was framed as a distant environmental problem, something for future generations or faraway places, but it is arriving first and most concretely as a financial one. It's showing up right now in the simple, rising price of insuring the place where you live. So the next great financial shock may not begin on Wall Street at all. It may begin with a letter in the mail, telling an ordinary family that their insurance won't be renewed. Watch 3 things where insurers are quietly pulling out, how fast premiums keep climbing, and whether governments can hold the line without going broke themselves, because the climate bill is already coming due. Not all at once, but quietly, one policy at a time. If this made the news make more sense, that is exactly what this channel is for, the money story behind the headlines. Subscribe and we'll break down the next one together.